And then John, I do think we've got Maggie in the room. Maggie, if you
Okay,
want,
Maggie, can you hear me?
Yes,
Hello,
John, I
Maggie.
can.
Okay, great. Maggie, go ahead and get your PowerPoint up. We'll
Okay.
look for my glasses. And Maggie got her start as a trader just before the dot-com crash. She was frustrated with her financial advisor. His buy and hold was not working well for her. So she fired him, decided to learn how to trade stocks and options for herself. Within 3 years, she turned 25,000 into just over $1 million. As weekly options started showing up in 2010, she designed new and better ways to trade options, anticipate the ups and downs of the stock market, approaching each trade in a way that's nearly always profitable. 2012, she started teaching her friends and family the same. Okay.
So I'm Maggie Roth, and John told you a little bit about me, but I bought my first stock 6 months after I graduated from college in 1969, and it was GE. I remember it to this day. I was so excited. And I used a broker, of course, and I traded stocks over the next 30 years with returns that usually beat the market. Some years not, but mostly beat the market. And it was in there. What I learned early in the game was that my broker was a salesman first. He cared more about me just trading rather than me making gains. And and I couldn't remember the date, I was trying to find it. I attended a traveling conference and I heard Tom Sosnoff and Scott Sheridan speak about a new trading platform, Thinkorswim. And I signed up right away. I was picking my own stocks to trade by then anyway, so why pay a broker uh, to place those trades? And back then it was very expensive to place a trade, close to $100 on some of them. So plus I wanted to know about options trading. They had both mentioned options trading in their little presentation, their little dog and pony show. And then in 2005, the CBOE started a pilot program with weekly options. And of course, I was really excited about that. I didn't know much about them at that time. And it was in a previous Mad Hedge Fund Summit that I covered one of my favorite trades, a credit diagonal spread, where I buy along approximately 10 to 12 weeks in the future. And then I sell every week a put against that long put that expires the following Friday. And that trade works best in a smooth uprising market like this one that I'm showing you right there. That was 2017. That happened to have been my best trading year ever. But you can see why. It was just a no-brainer time. So it was my bread and butter trade for over a decade. And my ROI averaged well over 350% per year. And that's been published and verified. So I can say that. The trade always performed well until, and it was when 2023, we hit that really herky-jerky market. And all of a sudden, it did not perform at all. So insanity is doing the same thing over and over and expecting different results. Now, that is attributed to Einstein. He actually did not say that. He used it originally. He used it in a lot of his stuff. And I'm a huge Einstein fan anyway. I got to meet him when I was a little kid, and just he was a wonderful man as far as I was concerned. And I love his science and stuff. So after that really herky-jerky time in 2023, I started saying, well, what is my ideal trade which look like? What do I really want to happen? And so one of the first things is I like to hold for short time. And now I'm not a day trader. I'm usually a week-to-week type trader, but I like to hold over short periods of time. And I like things that have low risk. That's just me. I am not play it on the edge type of player, although I do play poker professionally, but even then it's low risk for me because I count cards. So everything I like in life is pretty much a low risk. I like fast returns. In other words, I want to make at least 5 to 10% a week. And if I can do that, I get great returns. So I like fast returns. I like to see them on the books. I like low maintenance trades. I do not want to sit and watch a computer screen all day. That is just not my lifestyle. In fact, if you know me, my thing is play as much as you work. And I don't want to sit at my computer all day watching the ticks on charts to make my trading decisions. That's just not me. But I believe folks get soggy and boring as they age, mostly because they've got too much computer time. They're watching too much TV and too much social media time. I think that is making us boring people. So I wanted to show you, and not enough learning and adventures. And I am an adventure person, and I'm going to have my big life hint for you guys right this minute. Right today, sit down and make a list of all the things you want to see, to do, to learn, to experience, and have that list with you all the time. And I'm going to share mine with you because I think it's telling. Now, I started keeping this list back in the 1970s. And I've got it here. I think you can see it there. These are just things. I update this list all the time. I just add another rev. But there's the list. I started in 1969. Now, I've still got some things on the list that I haven't accomplished. Once I color them in yellow, they're done. And the next time I revise this list, I take it off. But I am always adding things. Like this summer, I'm taking race car lessons, Formula One race car lessons, that kind of thing. So trading for me is a way to do all these things. It provides the money for me. But, I will also mention that I am on a longevity quest. I want to live to be over 150 years old. Now, right away, I know you're counting me off as some kind of kook, but I believe it's physically possible. And I'm part of a biohacking group, and we are doing a lot of scientific experiments and so forth to figure out if we can really make this happen and live well and healthy. So I'm pretty excited about that. So my suggestion to you all, sit down and make this kind of list, because when something walks in front of you, it's going to be there for you. And that's kind of a little side note. Let's get back to the real stuff here. There we go. We did that. All right. So I'll bet sitting in front of the computer for hours is not going to be on your list. So when I was looking for a trade to trade, I didn't want to do that. So my trade development goals, again, were low risk, minimum. I wanted to make a minimum of $500 a week without even thinking. And I don't want to constantly babysit the trade. That would make me happy if I can accomplish that. And this trade that I'm going to describe to you is one that you can do in a very low trading account. Like if you've got even $1,000 in it, you can do this trade. That's the beauty of it. If you've got $1 million, you'll make even more money, but it doesn't require huge amounts of cash to make it work. In Investing Buddies, we've got a trading group called Quantum Traders, and these are high-level traders. And we sit around, and it isn't just me teaching that group, it's all of us discussing ideas. And we meet every day. We go over what the market's going to look like. We figure out which trades need adjustment or maintenance, and we place new trades together. So in quantum trading, we talked about the ideal trading criteria, and it was one of the participants that came up with this idea, this trading strategy. I don't want to take credit for his because he worked hard on it and it's proving to be a good one. And he got to name it, and he named it pocket change, which, that was his. So the pocket change basic concept is trading far out of the money, a credit vertical to expire Friday. And the pocket change strategy is intended to be a very high win strategy. And a minimum 90% win rate is needed for success. We meet that. 80% of our trades actually expire worthless, which is exactly what we want to happen, because this is a credit vertical. So we're selling and bringing in income right there. And the risk reward, I gotta admit, is horrible. Losing trades are going to sting, and that's what we found out. So we are looking for ones that we think are not going to sting as bad. The starting point for ours is only 20 cents per spread. So this is the way we find our entries. So the setup on the trade is this. Stock volume is greater than 1 million shares per day. We don't want to trade any tickers that are trading less than 1 million per day, because the bid-ask spread will be awful and getting in and out of the trade is hard. So it must have weekly options and the tight bid-ask spread on the options. This is all standard stuff for investing buddies. We've talked about this for a year. In fact, I go for 2 million shares a day on most of my trades now, because there are a lot more traders out there and trading volume has greatly increased. So the specific setup to a pocket change is stock has large moves in the last 10 days. So here's an example. We went from 476 to 530 in 6 days, right there. That usually, when you see something going up that fast, chances are it's going to start going down. And that's where we would come in with a call credit vertical. Because when you sell a call, you want the price to go down so that you move further out of the money. Look for previous highs or low levels of support and resistance. There's your support and resistance. So this one had gone up a whole bunch in 6 days. It hit a resistance area right there. And you can kind of tell where you've got a big day and then the next day is a reversal. That usually means I'm ready to go down. Possible reversal developing right there. So this happened to be a bearish piercing candle. And I'm real big on learning candlestick patterns. So look for stocks that have shown some direction have shown some change of direction. And it can be from an earnings report, from an announcement, or just a trend that looks tired, like the one I just showed you. It blew up like a balloon and then it looked tired right at that resistance and it reversed. Avoid earnings announcements for a week of sister stocks with earnings. So a sister stock to me is something like Palo Alto and CrowdStrike, or Walmart and Target. They usually tend to travel in pairs, or Home Depot and Lowe's. So if Home Depot is having its earnings, do not trade low in the same week, because it's going to be, let's say, abnormal type of trading. When to trade, this is always an intra-week trade, always. No need to look at this before 1 Eastern Standard on Monday. I usually do most of my trading on Tuesday, Wednesday, and Thursday are my most active days. It doesn't matter what time of the day you trade, but I prefer to have some, cat just walked across my keyboard. Sorry about that. I prefer to have some trades already on board on Tuesday before noon, same hours on Wednesday and Thursday. Friday, generally not a good day to trade this trade. The trade entrance, determine the direction of the trend and sell the appropriate credit vertical. So in other words, do a put if the price action is going up, a call if the price action is going down. Look for at least a 20% credit at the strike nearest the previous high or low. Many times to get the 20% credit, you have to accept higher spreads between strikes. So in other words, they may be showing dollar spreads out there, but you may have to do a $3 strike. It means you're accepting a slightly higher risk, but you're way out of the money, so it works. The risk is offset because of how far out of the money the trade is. I just said that. Trade exits. Most trades on this trade expire worthless on Friday. More than 80% of them do. And if the trade's in trouble, it's best just to exit and accept the loss. When things go really wrong, we call it an angry hornet. And we just, we have some of those, and I'll show you in a minute. They go wrong. It's impossible to trade 100% of the time. So here's like a total for different weeks here. And you can see during this, what was this, a month, March? No, this was 2 months. We had 1, 2, 3 go bad, and you can see they're just huge there. But during that time, we had a lot more of them, 94 trades go well. And, we put on 94 trades, 91 of them went well, 3 of them went bad. So not bad, that hurt. So there's all our results. And this was trading just a few contracts because we were testing it over and over. So that was our results there. And I do believe in keeping trade journals. This is just a summary of the trade journals. And if you ever want trade journals, I am the Excel queen out there. I know how to set them up and make them pretty and easy to use. So yeah, if you've got a trade you want to start following, just email me and I'll help you set up a trade journal. So I want to look at the watch list for this week. These were the ones we were watching. And then I actually placed 2 on, or 1 on coin and a trade on snow. And I want to go through those with you. So here was snow. It had reversed, come down, and it set its little bottom here along that resistance, right, or support right there for 3 days in a row. And it looked like it was ready to reverse and go up. So I went out of the money and I sold the 129 strike. I'm way out of the money on that one. And I bought my my protective put a little below the 129. But I always put that ugly green line on there saying, hey, if the price action comes near that and violates it, I need to get out. So I can just see it visually. And let's see. The price was sitting on support. I said that. Sold a credit put vertical at the 129, 126, and I collected 35 cents right there. And there's where it was. That was the 129, and you can see the 126. So I sold this for 63 cents and I bought that for 28, collected 35 cents. So I'm going to show you where that's at right now. Let's bring this as my trading, hold on, platform over there. And we're going to look at snow. Let me make that bigger. By the way, I still use Thinkorswim, even though they've now owned by Charles Schwab. It isn't quite the same, but it's still a good trading platform. And I wanted to show you this one specifically because today I had a little scare right there. The trade went all the way down almost to my 129 and it bounced up there. And so what I do is I have an alert and I put the alert a little higher. So if I'm off doing something, my phone dings me and I carry my laptop with me. So today I was just watching the storm. So I wasn't anywhere. I was at home, but some days I'm out doing things and it dings me. I go find a computer and I look to see if I need to adjust it. Now this one came right back. I'm going to the day by the minute, and you can see that did that early on. And you know, the bad thing is I didn't have any internet there, so I didn't panic at all. My phone went off and I tried to look at it on my phone and I just went, oh, well, because I'd gotten taken out by the storm that went over. And right now I can't even get out of my driveway because I have big trees laying in the road right at my gate. So it's pretty bad, but you can see it bounced up and it's doing just fine again. Now then, what did it do overnight is my next question. Well, looks like there was a little bit of buy-in there, but it didn't push the price up, but there was volume there. It was like 500,000 shares pushing
Sorry to
volume.
interrupt. Sorry to
Oh,
interrupt, Maggie. It looks like we're not seeing the chart.
okay, I'm sorry.
Oh, all good.
Uh,
Green.
I dragged it over. Tell me if you start seeing it. Share right there. I apologize. Are you seeing it now?
Not yet.
Okay.
But there we go.
There we go. I apologize. I'm on one day. I'm going back to the 3 months. Thanks, Kate.
Yep.
So you can see right there today, it went down almost to my 129. So this is where, again, I saw that support there. I got into it. I am in I thought it was going to go up, so I had bought a put credit vertical. And so I was in trouble right there. But when I go to the 1 day, you can see it bounced right off of it and came back up. And that happens sometimes. It doesn't happen a lot. Most of them stay away from out of the money, but you can, it's just how it is. And my wish, of course, is that we get to Friday and it expires worthless, and I'll keep watching it. So that was coin. Now I'm going to go back to where's my slideshow? Right there. And I gotta make sure you're seeing that, which I can't tell, but let me do share again. You're sharing screen. I'm going to stop it, and then we're going to make sure that we're sharing. Oops, I lost it altogether. Share screen. And so I'm back on. Cancel this. Okay.
We're not, I don't know that you share, we're not seeing anything currently.
Okay. You can tell I don't do this particular
All
format
good.
that often.
You know what? Every summit is different, or every webinar is different.
Yeah,
So.
it is. I use GoToWebinar
Oh, yeah.
most of mine. So let's see. Okay, there we are, and there we are. Okay,
Are you hitting share screen with like the green button at the bottom?
yes.
Okay.
Share screen, and I picked the screen. There it
Okay.
is. And share. There we go.
There we go. Now we're seeing your PowerPoint again.
Oh, excellent, excellent. So from the current slide. There we go. So the next one I did was on coin. And here it was. You can see it had been going up, and it looked like it was going to continue to go up. So I sold a credit put vertical again, you know, because it had its little down and then it started up, and I did the 210, 220 for only a 15-cent credit this time. That's okay. I just sold more contracts and I felt okay. So there it was. I took in 25 cents and I spent 10 cents for the debit portion of it. So 15 cents. So for a copy of the trade journal that I use and the trading rules, just email me and I will be glad to just send those right off in the email. And wow, this went a lot faster than I had time for. So I'm going to explain what we're all about it Investing Buddies. It's all about education because I got lucky and ran into Tom Sosnoff in Invest Tools years ago, and they had fabulous education. What I am finding now out there is there are a lot of people that come on, and I call them one-hit wonders. And they found something that works for a short time. They haven't been trading long, but the market right now is saturated with a lot of people that are not really great traders, and they haven't been through a lot of cycles and stuff. So not to say they don't have something great to offer, but I'm just aware of how many are coming on board right now. Whereas when I started, there was a handful of us that were teaching. Now it's a saturated market. It'll go away after a while, and everything swings, pendulum back and forth. So what you come on to us is we sit down in a phone call. And in fact, that's my offer to you, is that you come on, you do a phone call with us, and we point you to where you should be in the education. The beginner's blueprint is for somebody that's never traded before. And what we go over there is how the market works, the basics of what a put is, a call is, just getting you up. We help you set up your charts and set up your platform and just get you going. And then you go to options crash course. Now I think it's about 7 different trading strategies, and they fit all kinds of markets. That's the whole thing. You can't trade the same thing in every market and have it work well, especially if you trade like me and you trade options. So I've got that, and the options crash course takes you through all of them little by little so that you know them, you have all the trading rules, and you have the basics down. And then we send you to mastering the trade. This is practice time with me, and we meet twice a week, and we put on trades and we adjust them, and we do maintenance. Like today, we had to do maintenance on one. It was it was an iron condor that had taken out one of the call rails, and so we had to do some maintenance on it to get it back and set up for another profitable round. So that's what mastering the trade's all about. And at the end of that, you should know how to put on each of the 7 different styles I use for trading with confidence and know how to adjust them. And then there's some people like more one-on-one. We have one-on-one with a successful trader. It's mentoring. And usually we do 3 months with that, with 1 year with me once a week for 3 months, or with there's 2 of us that do it. The other trader was also trained by me, and she's been very successful. I never bring on somebody to teach until they have shown, and we've gone through their trading journals to make sure that they really are the real deal. Millionaire membership is a subscription service that's once a week we meet in a webinar. I go over what I see happening in the market, what I see to trade, and then people are throwing out ideas. Well, look at this one. And I go through and I analyze it and then tell them if I would trade it or not trade it. We have recently added Forex and binary trading. I'm not an expert in it yet, but we brought a guy on board that is pretty darn good at it. And finally, there's a quantum trading group, which is a group of, well, there's 63 in there. There's only 63 in there right now, but it's growing little by little. And these are people that are really high-level traders, and they're idea people. They're capable of setting up what we call what-if situations, and going through all the criteria there. It's actually, for me, hey, both of you, quiet down. Come here. Good dog. Come here. And so I love doing quantum because I learn as much as I'm giving, I'm getting back. And It's exciting for me. I think trading is a very lonely thing. And so it's much more fun when you've got a group of traders to trade with you. It's a lot more fun, especially if they're idea people too, and it's not all on my back. So that's what we're all about. We want you to be thinking traders and not just copycat traders. So are there any questions out there, Kate?
Yeah, I'm looking. Let's see. Go ahead and feel free to type in any questions you might have for Maggie. I'll scroll here and see if we.
Okay. I know this is the last session of the day and you guys are probably really tired, but I appreciate you hanging around. I would have been here early this morning with, more, but
We
thanks
never
for
get tired.
letting me come back.
I'm a major in the Marine Corps. There is no such thing as tired.
Oh, okay. Well, I'm old. There is such a thing as tired. And
Pain is fear leaving the body. That's what they teach us.
it's the spirit leaving the body.
No, it's pain is fear leaving the body.
Oh, gotcha.
At least that's what they tell you in boot camp.
Okay.
Looks like there is one question. Someone's asking if you still do money press trades.
Yeah, that was the I tried to because somebody else started using that same verbiage. And so I tried to get it copyrighted, and it's in the process of, but because so many people are using it, that's the diagonal credit spread. And I taught that on a former fund manager. I use it all. It's my bread and butter trade that I talked about. Now, it didn't work well in 2023. It worked well through the COVID time because I just used the long leg of the money press mostly during that time. But when the market started that herky-jerky look, just up and down with no rhyme or reason, it did not work during that time. It did not work well. And that's why we developed this new trade that is working well in the herky-jerky. Now, I believe we are going into another smooth market. It usually happens right after the presidential election or leading into the presidential elections and after during the lame duck time. And sometimes like Biden got, 8-9 months of really smooth upturning market before things fell apart. Trump got even longer, and Biden got a good, honeymoon period in there too. So I think we're going into a smoother up market. So I will be doing a lot more money presses. So thanks for the question. So is that about it then?
Yeah, I'm not seeing any other questions currently.
That
I have a
tells me.
question.
Sure, John.
What's the biggest mistake that you see beginning traders make?
Not getting the education and trading without testing things in paper money. And I see that over and over again. And very honestly, when I first started trading options, I spent 6 months in paper. And I hear this all the time. Well, I don't have any skin in the game. It's no fun unless I've got, some risk on the line and so forth. But I'm more cautious. I'm also get better returns than most people because I have practiced so much. So the biggest mistake, just jumping in and thinking you can do it by following somebody else's suggested trade without understanding it. Because if it goes wrong and you've got to figure out how to adjust it, you haven't got a clue. What's the biggest one you see, John?
Over trading.
I have a 2% rule. I never put more than 2% in any one trade.
Well, we
And
run 10 positions, 10% each, but we have a very aggressive stop loss rule. If
okay.
position loses more than 20%, we stop out automatically. And that's
Okay.
mistake number two. Beginners don't have stop loss strategies. Their stop loss strategy is to hope. Is
I
the hope
agree.
stock will turn around, get back to cost so they can get the heck out of there.
Yep.
I'm
Now,
sure
I
you.
think 20% is a deep stop loss. I don't go that deep.
Well, that's 20% of one position.
Oh, okay.
So it's 2% of the total portfolio.
I gotcha.
And
So
usually
2%
if
risk.
I get
Yeah.
a sense of the direction, I'll stop out way before then.
Yeah. Yeah. One of my
It's-
favorite things to do is have a credit vertical on. It changes direction. I pull off the short and just leave the long and let it make money for me. I do that all the time.
If you have that fine a read on market timing and direction, that's great.
Yeah, I
Um,
do.
but usually you end up taking off your longs at the bottom and your shorts at the top.
No, I don't. One of the things I've developed, John, is early in the morning before the market opens. I get up around 4 in the morning and I do what I call an AML journal, AM market outlook. And I pull together certain data and I actually predict what the market's going to do for the day. And I keep it on a journal. I see if I can pull it up and show you. I hit 75 to 80% accuracy, predicting every day what the market's going to do. And I teach people how to do it too, because I think it's important to do this and not be the tail on the dog. Be the dog wagging the tail. So let's see, Animal Journal. And I do this. Okay, here it is. And I'll just show you like last month was a bad month. I was only 78% accurate. But I'm going to share this now. Let's see. Figure out how to do this, Kate. I may have you help me again. Let's
Sure.
go to
PowerPoint 911.
yeah. It's Zoom. I haven't used Zoom. Let's see. Why isn't that okay? Cheryl, I just had it a while ago. Oh, there it is. Share. Share. Okay, and there it is. Oh no, there it is. So this is a journal I put together every single morning before the market ever opens. And I predict the direction that it's going to go at the opening, which is pretty easy, at the hour mark after all the flurries, there's a lot of trading right as the market opens, and then at the end of the day. And like last month, I was 77% accurate for guessing what the market would do for the day. And that was from the opening to the close. I know. And I do a lot of work like this. I teach people how to do it, how to read this. And these are all things, well, this is, the accumulation distribution's easy, but this part of it is something I develop. I don't think I've ever seen anybody else doing it. And I do watch gold. Gold isn't reacting like it did in the old days. In the old days, when the market went down, people went to gold. That is no longer true. But I have canary stocks that I measure, whether they're up, down, or sideways, and tells me what the market's going to do. So yeah, over the years, I've gotten really good at reading the market. And as far as reading a stock chart, yeah, that's kind of easy for me. Okay. Got any other great questions, John?
What's the best way to make a margarita?
Go to a great bartender.
I'm sure you have a lot of those in Texas.
We do. We do.
For about 40 years ago, I had to drive my sister to Texas A&M
Oh,
from Los Angeles for her to go to business school. And it was a 2-day nonstop drive. And we finally get to Texas A&M. We go to the nearest bar. We go in there, and everyone in there is line dancing.
Oh,
What a cultural shock. But we faked it,
that's right.
ordered some margaritas and just blended as much as we could.
John, did you know I was a professional dancer?
I did not. What kind of
Yeah.
dance?
It was ballroom. My husband and I did mostly Latin, but we were 10 dance champs. And so I danced for years. When he died, I kind of quit dancing.
Hey,
So
I
that was
ballroom
kind of
dance.
sad.
Come to our Alaska seminar at sea. It's a 10-day cruise to Alaska, and we have several of our Mad Hedge customers joining us for a seminar there.
Oh, fun. Now, do you leave from Seattle or Victoria?
So that's Vancouver.
Vancouver. So you leave from
Yeah, we have to
Vancouver.
fly from uh San Francisco up to Vancouver.
Oh, fun.
And
So what are the dates of
10
that,
days
John?
of ballroom dancing. I mean, the Cunard ships have these great ballrooms.
Oh, yeah.
And the only problem is that sometimes you make a step and the floor moves out from under you and you end up falling on the little old lady next door to you.
Oh, I love it.